everyone. Okay, I'm not sure if everyone can see my screen. Just give me a sec to double check everything. Can everyone see my screen? Okay, let me just double check if the screen is working. Okay, everyone can see my screen? Okay, cool. Sorry for the slight delay. I was having a bit of a technical difficulty earlier on. I wasn't sure if it was streaming or not. Now that I see that it's live, I guess it's streaming already. Okay, so hey, how's everyone? Yes, we are back to streaming on multiple platforms. Hello. Okay, we'll just give everyone else a minute or two to settle in. Okay, cool. Okay, again, hey everyone, welcome to our webinar today. We are doing our Tuesdays topical webinar for you guys. We do this for you guys 3 times a week, Monday, Tuesday, and Thursdays. And today we're doing the Tuesday topical. Okay, so today we're gonna be going through support and resistance. Okay, we'll be going through support resistance. So if you guys are new here and you're not very sure how to do support resistance or how to use it, do let me know in the chat box if you guys have any questions. So this is part 2 of our 2 parts of support resistance. Last week, we already did 1 part of support and resistance, and this week we're doing the other part, okay? Okay, cool. So as usual, you guys already know how this works. Anytime we're doing these webinars, we have to start with a disclaimer first, of course, right? Because we need to remind you guys that trading, FX, and CFDs do carry significant risk and it's not suitable for all investors. Okay, so especially if you are trading on margin, the risk just multiplies by the margin you are taking. Okay, so do be cautious. Please be cautious when you are trading. And the other disclaimer that I want to highlight is that anything I share with you guys in this webinar should not be construed as trading advice, right? This is purely educational. Please take this as an educational webinar, right? Okay, I'm not sure if anyone else is having difficulties with logging in, but if you are, do drop. I hope you find a way eventually. Okay, so again, educational, please do not take this as trainer advice. This is not a signals group. This is not a forecasting group, okay? We're here to learn and ultimately learn how to grow our accounts. Okay, cool. So let's meet the team, right? For those who don't already know who we are, you guys are here every week. I'm sure you guys already know who we are, right? Okay, for those who don't already know who we are Everest Watching Group. We are a Singapore-based fintech company. Okay, we're a Singapore-based fintech company. So what we do here at Everest is we basically specialize in research and strategies, back testing and whatnot, and we trade as well. So we do a lot of advising of where we think the markets are going. We advise banks, hedge funds, brokerages, financial institutions. And also, we are also the finalists for the Best Forex and Best Equity Research for 2019, 2020, and 2021. Okay, so today, Vantage Markets have a collaboration with us, right, to bring this webinar for you guys, okay? Because the whole point of this webinar is to help you guys grow as traders and to eventually grow your account as well. So again, if at any point of time you guys feel like you have any questions you want to ask me, anything at all regarding trading, do feel free to ask. Don't be shy, okay? Okay, cool. I'm going to move on to the next slide. Okay, let's start with our topic proper. So again, we're going to do support and resistance today. So support and resistance, the easiest way to spot support and resistance is actually to look for swing highs and swing lows. So swing highs and swing lows are the easiest way to look for support and resistance. So let me just grab my pen so that I can show you guys what I'm talking about. So you can see here there's a swing high, and here there's a swing low, and here there's a swing high, and swing high, right? Okay, so your job is to identify these swing highs and swing lows, right? Sorry, the swing lows as well, because these swing highs and swing lows will be your support and resistance. Okay, this swing highs and swing lows will be your support and resistance. So how I like to think about support and resistance, I said this in almost all my webinars. For the regulars here, you guys would have heard this so many times already. So the easiest way I think of support and resistance is that, okay, this is Bob, right? This is Bob. He is walking, he's pushing a ball rather. Okay, he's walking to the right. He's walking to the right, he's walking to the right, he's walking to the right. And he encounters a door, okay? He encounters a door. Okay, so in the context of trading, right? In the same context of trading, Bob is price, okay? Bob is his candlesticks, and the door is your support and resistance. Okay, so you can see how price came here and it turns. Every time it comes to a resistance, it turns. It comes to a support, it turns. It comes to a resistance, it turns. It comes to a support, resistance, it turns back. It comes to a support and it reverses back. Okay, so similarly with the door and Bob, right? Let's say Bob reaches the door. Okay, Bob reaches the door. If the door is a strong and heavy door made out of really heavy metal, chances are Bob is going to get here and he has to reverse, okay? Because there is barrier, there is some form of resistance there, okay? Are we good so far? Okay, cool. Okay, but let's say Bob reaches this door and he finds that this door is very light, it's very easy to push. He can push and he can continue into the next room. So it's the same as when we look at the charts. Okay, let me just erase everything I drew. You can see here, if you zoom in a little, you notice that actually price has always made this little kind of swing highs here, this little forms of swing highs. So that means that there was some kind of resistance. It's just that it wasn't strong enough to stop price from going higher. Okay, so that's how I like to think of support and resistance. I hope my analogy makes sense, right? Okay, again, if you guys don't know what I'm saying, please ask in the chat box. Okay, next. Okay, the wrong way to look for swing support and resistance. Okay, so whenever you're looking for support and resistance, you need to make sure that your support and resistance is significant. That means your swing high or your swing low is significant. Okay, it has to be a very significant one. For example, this is a significant one. Okay, this is a very significant. You can see that this is the swing low of this entire move here. Okay, this is a significant swing low here. This is a significant swing high here. Okay, it's an entire move and there's a swing high and swing low. Okay, so you will have traders, especially new traders or maybe chartists who are a bit new to the charts. They will look at this charts and they will think, wait, there's so many support and resistance along the way, right? There's so many swing highs here. 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 There's so many swing lows here. There's so many swing lows here. There's so many swing lows here. Again, yes, they are swing highs and swing lows. I mean, if you go down to even small time frame, you will see it clearly. But on the time frame that you're looking at, you need to find significant swing high and swing low. That means you need to find an entire structure and look for the swing high of or the swing low of that entire move or in that entire structure. Okay. All right. So we've got these. These are very, very clear. Okay, these are very, very clear. You can see like this is one entire move. Okay, these are just one single swing. Okay, so we're gonna look at single swings, and this can be used as support and resistance. Okay, so there's a resistance here, and there is a support here. Okay, because this is entire move. So these are significant moves that we can use as support and resistance. By the way, guys, today's topic is actually very basic. It's like basically the fundamentals of trading, actually, or the fundamentals of technical analysis. Okay, so if support resistance is not something you're very familiar with or something you're not very strong or good at identifying, I think this webinar will benefit you a lot, and you can use this information to practice at home when you are free. Okay, just take it as homework and practice at home when you are free. Okay. Okay, yeah, so this is one entire swing here, and this will be your resistance and this will be your support. I know along the way you see like support and resistance along the way, right? But if you zoom out a little and you see the whole entire bigger picture, you'll see this entire move as one on its own. Okay, so this is again, I know for the newer people here it's a bit confusing, but this is, you need to train your eyes to be able to catch certain structures and certain moves that are significant. Okay? Okay, cool. Okay, so we've got these. These are the one that I was telling you about where there's so many little moves. These are multiple swings. Okay, so multiple swings can also be a form of support resistance. Okay, I'll show you guys what I mean. If you see, this is one upwards movement. This is one downwards movement. This is one upwards movement. You need to train your eyes and you need to be practicing how to catch those swing highs and swing lows by catching those entire moves, okay? This one swing low movement, this one swing high, this one swing low, and this is one swing high movement, okay? Do we have that? So as you can see in this exact same area, there's actually multiple swing highs lining up in the exact same area, okay? That is a very good thing, okay? It just means that every time price came to this area, it respects this area, it acknowledges that there is a strong resistance there, and it turns back, okay? Similarly to the door, okay? So again, Bob, sorry about my drawing. He's walking, he reaches the door. He pushes it one time, he gives up and he turns back. Okay, he comes back tomorrow, he pushes it again, he gives up and he turns back. He comes back the third day, he pushes it and he turns back. Okay, he comes back 4 times, as you can see in this example. He comes back 4 times. He pushes the door, and he fails, and he turns back. It just means that this is just acknowledgement that yes, this door or this resistance area is actually a very, very strong or heavy door, or it's a very strong resistance, and price has a very hard time of getting through to the other side. Okay, price has a very hard time of breaking it. Okay, so now does that mean, do you guys think that means that price will forever not be able to break to the other side? Do you think that every time price or Bob comes to this door, he will have no choice but to turn back? Can you guys let me know in the chat box so I know if you guys are following? Do you think that just because for the last 4 times Bob came to this area, he came to this door and he pushes the door and he's unable, so he turns back? Do you think this is going to be forever? Okay, exactly. No, it's not going to be forever. Okay, so let's say you are Bob. Right? You keep pushing this door that is so heavy and you can't push it open. If you eventually you're like, oh, I'm so tired of this, you end up going to the gym. Okay, you go to the gym. Now you have so many muscles, like you have like really strong muscles. Okay, now Bob goes to the gym. He comes back and he's able to push the door. Okay, so what I'm saying is that it's not impossible for price to break this area. It's just that it's hard. Okay, so let's say similarly to price, let's say Bob, he goes to the gym, he comes back, he can now push the door. Similar to price, if price one day has enough bullish momentum, okay, if price has enough bullish momentum, it will eventually be able to push this door open. Okay, it will eventually have enough strength to push this door open or to break this resistance. Okay, so when things are lining up in the same place, it's good. It is just an acknowledgement of how strong that resistance area is. Okay. Next. Okay, so now let's look at trend line. So why we are looking at trend line is because trend line is a form of support and resistance. So we've got different kinds of support and resistance. We've got horizontal support and resistance. Sorry, my hand's like a little weird, but yes, horizontal support and resistance, that means it's straight, like flat, okay? We've got trend lines. This is also a form of support resistance. The other form of support resistance can be Fibonacci levels, can also be indicators. So some indicators, like, for example, the Ichimoku cloud is a form of support and resistance. So for those who've never seen an Ichimoku cloud, the cloud itself is a form of support and resistance. Other things like channels are also a form of support resistance. Triangle, so things that you draw on the chart. That means chart patterns can also be a form of support and resistance. Okay, so today we're gonna look at trend line and see how trend line would work as a form of support and resistance. So there's 2 kinds of trend line. Okay, there are 2 kinds of trend line. One is the ascending trend line, and one is the descending trend line. Okay, the descent, it's in the name. Okay, so the descending trend line is when price is on a downtrend, and the ascending trend line is when price is on a uptrend. Okay, so what is the proper way of drawing a trend line? Do we take it from the body of the candle, or do we take it from the wick of the candle? Can you guys let me know in the chat box so I know if you guys are still following? All right, we've got mixed answers coming in. Okay, we do have mixed answers coming in. Some of you are saying take it from the body of the trend line. Some of you are saying take it from the wick of the trend line. Okay, just give me. Okay, cool. Sorry, I was trying to refresh the chat. It was stuck for a bit. Okay, there you go. Okay, cool. So the correct answer is, I think when it comes to trading, right? When it comes to trading, there is no right or wrong. Okay, there is no right or wrong. There is which works better. Okay, so which work better we find is that which works better we find is that when price, we take the trend line based on the wicks. Okay, we are streaming on different platforms today. Okay, so if you are not sure if you guys are still with me, just give me a moment to check. Okay, cool. So the screen is working for most of you. Okay, right, we do take it from the wick of the candlesticks. And why we take it from the wick of the candlesticks is because the reason we take it from the wick is because price on different time frames will end the structure of their swing high or swing low on a different part. Okay, so I'll give you an example. Just because let's say we're on a 4 hours time frame, right? We're on the 4 hours time frame. The 4 hours time frame ends here. The body of the candle ends in this area. But if you go down to the smaller time frame, if you go down to the 1 hour, the 15 minutes, the 5 minutes, or the 3 minutes, the body might have closed below that body area on the 4 hours. Okay. For those who don't really understand what I'm saying, we can move on to the live charts later if we have time to look for a few examples. Okay, so when we take it from the wick of the candlesticks, when we go to different time frames, it would still be on the wick. Okay, the wick of the candlesticks, the bottom of the candlesticks, or the top of the candlesticks, that means the bottom end or the top end of the candlesticks is where price ends on every time frame. Okay, so that's why when we're drawing support and resistance and trend lines, we take it from the bottom and the top of the wick of the candlesticks. Okay, we take it from the very end. Okay. Okay, cool. So yes, we have achieved that it is a wick. Based on the wick, we can see that price would have broken out here, and that's how it is a confirm. It would have broken out on all time frames. Okay, the problem again with not taking from the wick, let's say we take from the body, price would have broken out on maybe the 4 hours, but may not have broken out on the 1 hour. Okay, cool. Okay, so this is another example of not taking from the wick. Okay, so if we were to take from the wick, we would have taken from this point, and maybe this point. Okay, the only reason why we are not taking from the wick at any point of time, okay, again, I say there's no right or wrong. It's actually which you do better. Okay, the only reason you are never taking you are not taking from the wick is because if you're drawing the trend line and it just doesn't connect, right? It just doesn't connect all the candlesticks or that trend together, then yes, you can take from maybe a little bit closer to the body or any part of the wick. But we try our best. Again, there's no perfect charts. Like ideally, when I look at the charts, I want to take everything from the wick. I want to look for support and resistance. I want all the Fibonacci confluence to be lining up. I want all of this to be playing out nicely, right? But that's not the case every time. That's really not the case every time. Okay, so the best case is that if it's connecting from the wick, all the wicks, but sometimes it doesn't, and that's totally fine. We can take it from any point of the wick as long as we don't cut through the body. Okay. Okay. So this is an example. Okay, this is an example of taking from the body and how on a different time frame it would look like it cut through the body. Okay, so on the bigger time frame, it looks like it's just respecting the body, but when we move down to the smaller time frame, we can see that it cuts through the body. Okay, so that's why we try again our best to take from the wick. Okay, so questions. I'm gonna label this as A, and I am going to label this as B. Which trend line looks better to you guys? Oh yeah, please take note that a valid trend line requires 3 touches at least, okay? So 1, 2, and 3 touches. 1, 2, and 3 touches, okay? It needs 3 touches. If it's less than 3, more is fine, but less than 3 is not a valid trend line. Okay, so can you guys just let me know in the chat box? Hey Baptist, welcome. Welcome to our webinar. Can you guys just let me know in the chat box if you think the trend line in A or the trend line in B looks better? Okay, we've got mixed answers coming in, right? We've got mixed answers coming in already. Okay, we've got A and B. Some say it looks the same. Okay, honestly, to me, both looks good. That was a trick question. There was none that looked better than the other. They both look equally good. Okay, that was a trick question. So they are both good. They are both ideally taking from the wick. Okay, they're taking from wick. Do you see from this part that the wick was cut a bit? Okay, it wasn't taken from the top of the wick. This is not as ideal as we would like it to be, but it's the best that we can draw. The best that we can draw based on the structure of the charts. Okay, so in this case, both charts are okay. Both charts are fine, but I do think this one looks a little bit better than this one. Why? Because this one, first of all, has more touches and it respects the wick better. Okay, it respects the wick better. Okay, cool. Okay, next question I've got for you guys. Is this a valid descending trend line? Can you guys let me know in the chat box if you think this is a valid descending trend line? Okay. Can you guys let me know why you think it's a valid descending trend line? Yes, because there are 3 touches, because it's respecting the candlestick structure, it's respecting the structure, it's going on a downtrend. Okay, you guys are spot on. So yes, so the first thing we notice is that it has 3 touches. Okay, so valid descending trend line requires 3 touches, which it has successfully done. Okay, the second thing is that this descending trend line did not cut through any of the body of the candle. Rather, it's just cutting through one wick here, okay? Again, ideally, we try to take it at the bottom of the wick, but sometimes the structure of the charts just does not allow us to. So it's totally fine to cut through the wick, but not cut through the body, okay? All right, cool. This is an example of a uptrend. In an uptrend, you draw the trend line at the bottom, and on a downtrend, you draw the trend line on the top, okay? I think this one is fairly simple. Okay, you can see price respecting this trend line. The trend line works as a form of support. If the trend line is on top, that means it's a descending trend line and it works as a resistance. So we can see that price came to this support, turned back, came to this support, turned back, came to this support, turned back, came to this support, turned back. And actually, if you actually look closer, this is actually would have been a channel as well, which is a form of support and resistance. Okay, so this top part would have been the resistance, and this bottom part would have been the support. Okay. Okay, cool. Do we have any questions thus far? Is everyone good with this for now? Okay, cool. Okay, next things next, we've got a downtrend. Again, you draw it from the top. You draw it from the top, it works as a form of resistance. So price going to this downtrend area and turning back, this would be your swing high resistance. Going up to that area again and turning back is a swing high resistance. The trend line being your resistance area. Okay, and price going up there for the same time and turning back is also a resistance. Okay, so this is the proper way to draw your descending or your ascending trend line. Okay, again, valid trend line is 3 touches, 1, 2, and 3. A lot of times when we see 2 touches, we don't consider it a valid trend line. Why? Because 2 touches seems like a coincidence, you know what I mean? It's more of a coincidence rather than a trend line. So I'll show you an example. Just from this charts alone, we would be able to see 2 touches already. Let me just erase this so that it looks clearer for you guys. Okay, we've got, this is 2 touches already. If we consider this an ascending trend line, price broken out here, and that would have been, we would have gotten in here for a buy, and then we would have lost because price broke out instead, okay? If we took this as a descending trend line, sorry, this was an ascending trend. If we took this as a descending trend line because of the 2 touches, price would have broken out here, and then we would have been stopped out because we would have gotten the direction wrong. So on the minimal, a descending or a ascending trend line again needs to be 3 touches. Why? Because 2 touches is a coincidence with, but then 3 touches is, it works well, okay? Okay, we've got another one here. Okay, so we've got 3, 1, 2, and 3 touches here, making it a valid descending trend line, right? Okay, but you can see that price broke out here. Okay, price broke out here. And if you are someone who drew that descending or ascending trend line, you see that price breakout, you will think, sorry, you think, hey, price broken out, I should get in for a buy, right? You think I should get in for a buy. That's thank you, Baptist. I try to be. Okay. Okay, so you would see price breaking out here and you would think, oh, okay, this is a breakout, I should get in for a buy. Okay, but that is why trend lines, we need to take this in mind, okay? Although I do think trend lines is a good form of support resistance, we need to take note that every time we are charting or looking for a trade, we should combine our analysis with different things. We should combine it with support resistance indicators, Fibonacci levels, trend line, horizontal support resistance, trend line, channels if it's available, or whatever chart patterns, head and shoulder, Batman, whatever flag pattern, whatever pattern is available to make our decision. So if price were to break here, I wouldn't have gotten in for a buy. Instead, I would have waited for the break of the horizontal swing high before I got in, okay? So in this case, my question for you guys does this trend I'm trying to structure that sentence. Is this trend line still valid since price has broken in this area? Is this trend line still valid since price has broken in this area? Can you guys let me know in the chat box? Okay, cool. Some of you say it's valid, some of you say it's not valid. Okay, I personally think this is very subjective. Okay, trend lines are very, very subjective. It's a very subjective drawing or tool to use when you are charting. Okay, so I don't like that it did a fake out. Okay, price doing a break here and going back in just means that this is not a very strong level. Okay, so I personally, I would still consider it a descending trend line. I will still consider it a valid trend line, but I will now take it as with a pinch of salt. That means when I am doing my analysis, right? I'm doing my analysis, I don't let this descending trend line weigh too much in my decision making. Okay, because technical analysis, the whole point of technical analysis, right, is to use tools, technical analysis tools, right, to make your decision of where you think price is going. So if the tool that you're using or that drawing that you're using is giving you mixed information or mixed signals, don't think too much into that tool that is giving you the mixed signals. Okay? Okay, cool. Okay, so can you guys let me know in the chat box what time frame do you think you should be using trend lines on? Let me know in the chat box, and so I know that if you guys are still following me or not. I'll give you like a minute to think about this. In the meantime, I'm going to see if this is, how does this look like? I'm gonna log in with my phone. I want to see if the screen is super tiny for you guys, right? Because I think some of you are here on your phones, right? And I can imagine like the screen is super tiny. I also want to see if there is a lag. Okay, there is a little bit of a lag when I speak, and by the time it gets to you. Okay, cool. So we've got answers coming in already. 1 hour, 4 hours, 4 hours, daily, 1 hour. Okay, the answer to this, it's another trick question. I'm so sorry, guys. The answer to this is that you can use trend lines on multiple time frames. Okay, you can use it on all time frames. Trend lines work the best on all time frames, but I must say that trend line works the best on bigger time frames. Although it works on all time frames, I have found that it works the best on bigger time frames. Why does it work on bigger time frames? Because the structure on bigger time frames holds better and stronger than the ones on the smaller time frames. Okay. Okay, so that means that if you spot a trend line on the 3 minutes as compared as spotting a trend line on the 4 hours chart or the 1 hour chart, okay, chances of price respecting that trend line on the 1 hour compared to the 3 minutes is higher on the 1 hour, okay, because the structure is stronger on the bigger time frames. Okay, so do take note of that when you are charting. Okay, let me just go on to the next slide. Okay, there you go. So how do we improve your setups? I see Baptist, Brian, John, William, you guys are here every week. You guys already know the way I used to improve the setups, but again, this is mostly for the new people here. Okay, so how we improve our setup is to combine the setup with other things that I was talking about. Okay, so our topic for today is support and resistance, right? So let's look for all the other tools and all the all the other technical analysis tools that gives you support and resistance. Okay, so one of it is horizontal support resistance that we have gone through in the beginning. Okay, second one is trend lines. Another one is channels, triangles, wedges, chart patterns. Okay, Fibonacci levels. Okay, we got Fibonacci levels. We've also got indicators. So a very good indicator that works as a form of support and resistance is actually number one, like just off the head off my head, Ichimoku, stochastics, RSI. Okay, these are indicators that can also show you some form of support and resistance. Okay, show you that there is some form of support and resistance on the chart. Okay. Okay, so how do we combine it? We can see price moving down in a very nice one move down here. Okay, so this is your swing high. This is your swing low. This is the more significant one. Along the way, we can acknowledge that there may be a swing high here. Okay. Why am I highlighting this? To show you guys that these are the areas that you can consider for your support and resistance. Okay, so you've got your price doing this downwards move here, doing this downwards move, and it's pulling back to the resistance of your Ichimoku cloud. So one, there is a resistance there. Okay, let's see if we can find anything else. When we are looking for support and resistance, our priority is always horizontal support and resistance. Okay, horizontal support and resistance is always our main priority. Okay, so when we are looking at this, the first thing we can see is, okay, one, there is a descending trend line that is lining up in this area. Okay, two, if you pull the Fibonacci retracement level, you pull it from this swing high here, because again, whenever we are drawing Fibonacci levels, we are looking for the most significant last swing high, which is in this case here, to the most significant last swing low, which is here. Okay, so we've got this, you pull it from here to here, and then you will get the 38.2% Fibonacci level from here. Okay, so do you see how price is lining up with this 38.2% Fibonacci level is lining up nicely with the Ichimoku resistance here. It's also lining up with the trend line resistance here. So this area becomes a very strong form of area. Okay, it's a very strong area, and price will have a very hard time breaking it. Okay, again, back to Bob. Bob is the easiest way to explain support resistance. Okay, sorry. Bob is really badly drawn most of the time, by the way. Okay, Bob is walking, he's walking, he reaches a door. Okay, he doesn't know if he can push the door open. So when you have so many things lining up in the same area, it's the same as having a door and having rocks behind the door. Very heavy rocks lining up behind the door. Okay, and all these rocks lying behind the door is a form of barrier, okay, that is stopping Bob from moving to the next room. Okay, so all these things lining up here is a form of barrier that is stopping price from going higher. So based on this alone, we have a kind of like a forecast or projection that price is going to reverse from here. Okay, that is our projection. Okay, and actually, true enough, it does reverse from there. Okay, you can see price came here. Price came here to the area we're talking about a bit. This is a different example, but yes, the area, and it does reverse. Why does it reverse? Because there's so many forms of barrier there, just different forms of barrier and different forms of resistance there. Okay, and now we're going to combine that even more with another indicator. Okay, so we have got the stochastic indicator. Not only do we have the Ichimoku saying that, oh, I'm at a resistance right now, I need to turn back. Okay, it's just so much barrier. We also have the stochastics here lining up with price here. Okay, lining up with price here, showing this that it lines up exactly with resistance. You can see on the stochastics level, the way that we use stochastics, we use support and resistance. We use horizontal support and resistance to see if price is at a horizontal support resistance. And we can see that on the stochastics, price was at a resistance. It's here, it's going to turn back. Okay, we expect price to turn back, and true enough, on the chart, it turns back. And the probability becomes higher because Ichimoku is also lining up there. The 38.2 Fibonacci retracement is also lining up there. The descending trend line is also lining up there. And also, I kind of like eyeball it a little, but it looks like there is a horizontal level lining up here as well. Okay, so there's just a lot of things lining up there, which is why this was a very probable sell trade. Okay. Okay, so let me see, we've got a few more minutes left. Okay, we can look at some live examples. Okay, we can look at some live examples, and then we can move on to the Q&A today. I don't think we have time to go on to the live charts today because we only have like 7 more minutes. So by the time we go into the live charts, I wouldn't be able to even show you a single chart. Okay. In the meantime, you guys can ask me questions as I'm going through the live examples. Okay, so let me go through one of it. The first one. Okay, so why are we calling for a sell from here? Can you guys let me know in the chat box so I know that you guys are following the entire webinar? Just looking at this chart, why do you think we call for a sell from there? Okay. We've got some answers coming in because the break of the ascending trend line. Okay. Nice eye, nice spot. Yes, there was an ascending trend line here, right? There was an ascending trend line here. Actually, sorry, my ascending trend line is not straight, but you guys know where I'm highlighting, right? Okay, there's an ascending trend line here, and price actually broke this ascending trend line. Okay, so let's just break down and kind of digest why we're doing certain things. Okay, so the first thing first is the break of this ascending trend line, which is signaling bearish momentum. Okay, it is signaling bearish momentum. Okay, so you've got price breaking that, which gives you a sense, okay, I think the bullish pressure is weak. It's probably going to go down from here because it has broken that uptrend. Okay. There's more. Guys can let me know in the chat box. Okay, yes, that's the one that I was looking for actually, the break of the triangle. So not only is this an ascending trend line, there's also a descending trend line here. So there is a triangle here that price has broken. So usually when price is ranging within a triangle, it's basically ranging in a form of support resistance. Again, the bottom of the triangle is the support, the top of the triangle is the resistance. Okay, it's usually formed by one descending trend line and one ascending trend line. It's not usually, actually, yes, it is usually. one descending trend line, one descending trend line. Okay, so there's different kind of triangles. There's you have your rising triangle and your falling, your descending triangle and your ascending triangle. Okay, so it has broken, which is signaling bullish momentum. Okay, another thing, again, thank you, Joash. Thank you. Yes. Thanks for being so responsive. Okay, so another thing, why we're calling for sell is because price. Let me just get rid of everything that I drew so you guys know what I'm talking about. Price broke, right? It did that break. And then it pulls back to this area. This area, which is a horizontal pullback area. You can see that in the past, price came here, reverse, price came here, reverse, making this area, this sell entry area, a significant key level and a probable area to be looking for our sell. Okay. Another thing that we could have done is to pull the Fibonacci level from here to here, and then maybe the 23.6 would have lined up here. Okay, so there's a lot of things lining up here, which is why we got in for that sell. Okay, that's exactly how we look for setup. It's very, I wouldn't say it's hard. I think the hard part is training your eyes to be able to catch the confluence. Okay. Okay, cool. Would you say that, okay, so I've got a question from Zara. Would you say that support resistance is very important? I think support resistance is the fundamental of technical analysis. It's so important. It is like when you're building a building, right? The foundation needs to be so strong. If not, your building will collapse. I think if you're not strong in support and resistance, it's going to be very hard for you to be very good at technical analysis. Okay, because I think a lot of technical analysis is a combination of support and resistance, just different types of support and resistance. Okay. Okay, let's look at a different example and then we can try to break it down together. Okay, in this example, I wouldn't be able because there's already answers here. But yes, why we're calling for a buy, because one, it broke out of the channel, right? It broke out of the channel here, which is indicating bullish momentum. It broke out of a nice overlap resistance turn support, okay? So there was a overlap resistance here, price broke out of that, came back to retest the exact same area, and then that's where we enter for the buy, okay? And it's also lining up nicely at the 23.6 Fibonacci retracement area, okay? From here, we take the swing high to the swing low. I know along the way there looks like there's a lot of swing high, but we need to take the most significant move. Okay, we want to take the most significant move, which is this one line down. Okay, we take the swing high to swing low and we project it. You will see that the 23.6 will line up here. And also because it crosses above the Ichimoku here. Okay, you can't see it here, but it did. Okay, there was an Ichimoku cloud here that it broke. Okay. Okay. Let me see how many more examples I got. 2 more examples. Let's break it out together so that I know you guys are still following. Okay, why are we calling a buy? Can you guys let me know in the chat box? Okay, actually. Okay, thank you. Yes. Break of the channel. Thank you, Joash. There was a break of a channel indicating bullishness. Okay, anything else? Yes, there was a break of an overlap area. It broke here, came back to retest that same area. Yes, also because it tested the 23.6% Fibonacci retracement. Okay, so this was a very good buy as well. Okay, I see you guys are getting a hang of this, right? But please don't just use my example. Please also go home and look for the examples as well. Okay, this is the last example before I end my webinar. Can we deconstruct why we got in for a sell here? Okay, thank you. Yes, break of triangle. So there's a triangle here. Price broke the triangle, which is signaling a bearish momentum. There was a horizontal support here. Price broke that as well. Okay, and it is moving below the Ichimoku cloud. Okay, so usually when that happens, I will wait for the pullback and then I will get in for the sell. Okay, so this is exactly how we look for setups using support resistance. Again, support resistance is super, super, super crucial. So please allocate some time into getting good at support resistance or mastering identifying support resistance. Okay, in the meantime, please, again, be cautious when you are trading. Practice makes perfect. Again, the hard part is not trading, the hard part is learning. So do take time to do that. I will catch you guys next week. Thanks for attending. Sorry, not next week, Thursday. I'll catch you guys on Thursday. Thanks for attending our webinar today. I will catch you guys again soon. Okay, bye guys.